Long-term investing is one of the most powerful ways to turn small investments into life-changing wealth, especially when you choose the right companies with strong fundamentals, consistent performance, and a clear vision for the future. And today we are diving into 3 long-term stocks that have the potential to make you rich. And we're talking about companies that are not just random picks, but businesses backed by solid fundamentals, a great future, and the strong backing of Wall Street analysts. So if you're serious about making money in the stock market, make sure to watch till the end and remember to subscribe and turn on notifications so you never miss an update on the hottest stocks in the market. First on our list is Lantheus Holdings Incorporated, trading under the ticker NASDAQ, LNTH. This is a Massachusetts-based company that specializes in radiopharmaceuticals and diagnostic imaging, serving critical needs in oncology and cardiology through its subsidiaries Lantheus Medical Imaging, Progenics, and Exony. The company is well known for its ability to develop and commercialize precision diagnostics and radiotherapeutics that help doctors detect and treat some of the most serious health conditions. Looking at the financials, Lantheus posted $372.8 million in worldwide revenue in the first quarter of 2025. GAAP fully diluted earnings per share came in at $1.02, down from $1.87 in Q1 2024, while adjusted EPS stood at $1.53, compared to $1.69 last year. Even with these declines, the company generated a healthy $98.8 million in free cash flow during the quarter, underscoring its ability to produce strong cash returns even during periods of operational transition. In addition to the Life Molecular Imaging deal, the company also closed its acquisition of Evergreen Theragnostics earlier in the year and announced the planned divestiture of its SPECT business, showing its focus on aligning resources with high-growth opportunities. Positive data from 2 negative 6,240 Malawian Kwacha's pivotal studies, with plans to file for NDA in the third quarter of 2025, adds another potential catalyst to its growth story. With a low beta of just 0.15, Lantheus is a defensive play with substantial upside, and analysts' average price target of $87.83 suggests a 60.1% upside from the current $54.86 price, with the most optimistic forecast reaching as high as $110. The second stock on our list is Haemonetics Corporation, listed on the NYSE under the ticker HA. Based in Massachusetts, Haemonetics is a global leader in the development and supply of innovative medical technologies and systems that serve blood and plasma collection, surgical cell salvage, and hospital transfusion services. With operations in more than 50 countries, Haemonetics solutions are integrated into healthcare systems around the world, helping hospitals improve efficiency, reduce costs, and deliver better patient care. This is the kind of company that may not grab headlines every day, but it has built a steady reputation as an indispensable part of the healthcare supply chain. On May 8, 2025, Haemonetics reported its Q4 2025 earnings, revealing a 9% revenue decline for the quarter and a 6% decline for fiscal 2025, primarily due to the planned CSL transition. The blood center segment saw a sharp 22% drop in revenue, and the company expects further declines of 23% to 26% in fiscal 2026 due to portfolio streamlining. While this might appear concerning on the surface, it's important to remember that these declines are part of a long-term strategic shift aimed at strengthening the company's core operations. Wall Street seems to agree, as Citi upgraded the stock from hold to buy on July 9, 2025, raising the price target from $71 to $90. This move indicates renewed confidence in the company's ability to turn the corner and unlock value for shareholders. From a financial standpoint, Haemonetics ended fiscal 2025 with $1.361 billion in revenue and adjusted earnings per diluted share of $4.57, supported by strong free cash flow of $145 million for the year. In Q4 alone, revenue was $331 million, adjusted EPS was $1.24, and free cash flow was $95 million, supported by $117 million in operating cash flow. With a beta of just 0.40, Haemonetics is another low-volatility stock. It's expected to deliver 11.12% EPS growth over the next 5 years. The average analyst price target sits at $80.67, representing a nearly 50% potential gain from the current $53.99 share price. with the high forecast going up to $105. For investors seeking stability in the healthcare sector combined with a clear growth path, Haemonetics is a compelling choice. Last on our list is United Bancorp Incorporated, trading on the NASDAQ under the ticker UBCP. This Ohio-based bank holding company for Unified Bank serves communities across eastern Ohio and northern West Virginia, providing both commercial and retail banking services. Founded in 1902, United Bancorp has been a steady financial institution for over a century, focusing on building relationships with customers and delivering consistent returns. This is a company that represents the more conservative side of long-term investing, steady, low-risk growth backed by disciplined capital management. One of the more notable recent developments for United Bancorp was the wave of insider buying in May 2025. The company's chair of the board, president and CEO, Scott Everson, purchased 2,197 shares valued at $29,923, while multiple directors and executives, including Gary Glessner, Randall Greenwood, Bethany E. Shun, Brian M. Hendershot, and John Hupingarner, made additional purchases collectively worth well over $100,000. Such significant insider buying is often seen as a strong signal of confidence in the company's future prospects. Financially, United Bancorp reported Q1 2025 net income of $84.3 million, or 59 cents per diluted share, down 3% from Q1 2024 due to merger expenses and higher credit loss provisions. Compared to Q4 2024, earnings fell 11% for similar reasons. However, net interest income reached a record $260.1 million, up 17% year-over-year, with net interest margin improving to 3.69%. The key driver here was the $1.9 billion acquisition of Piedmont Bancorp, which brought in $1.7 billion in net loans and $26.4 billion in deposits. While the acquisition added significant scale, it also came with $11.3 million in merger-related expenses and $18.7 million in credit loss provisions tied to acquired loans. Credit quality remains solid, with non-performing loans at just 0.29% of total loans and an allowance for loan losses of 1.3% of loans. The bank is also well-capitalized, with a 15.7% risk-based capital ratio, and has resumed share repurchases, buying back 567,000 shares at an average price of $34.93. With a low beta of 0.41 and projected EPS growth of 12.33% over the next 5 years, United Bancorp is ideal for conservative long-term investors seeking stability with moderate growth potential. While its short-term performance has been slightly negative, the long-term upside is promising as integration synergies from the Piedmont acquisition are realized. Well, that concludes our list of 3 long-term stocks with the potential to deliver strong returns while keeping volatility low. Lantheus Holdings offers cutting-edge medical diagnostics with a growing presence in Alzheimer's imaging. Haemonetics provides essential healthcare technologies with a global footprint, and United Bancorp delivers reliable banking services with a century-long track record. Each of these companies has the backing of Wall Street analysts, solid financials, and a clear growth strategy, making them strong candidates for any investor looking to build wealth steadily over time. Remember, in the stock market, it's not always about chasing the hottest trend. It's about finding great businesses that can grow consistently for years to come.